Hey everyone, welcome to today's session. I am Najmul Sadat. I am a certified US bookkeeper and tax preparer with over 10 years of experience. Today we will discuss about FMA chapter 1 called Professional Ethics. I hope you will enjoy this video. So let's get started. So I have extracted this information from the main materials to simplify for you. So, in business ethics, there are some codes of conduct or principles that guide a business activities and how a company makes decisions. It involves your organization's behavior is appropriate or questionable. There are three core concepts of business ethics like ethics, morality, and virtue. So ethics, we the philosophical study of what is right versus wrong is called ethics. And in morality, the application of ethical principles on personal level. And virtue is individual characteristics regarding conformity to what is right. If her his employee does the right thing even when company policy does not explicitly require it. Okay, then tone of the top. So tone at the top is like the activities or conduct done by management is reflection of the ethics of its member. Like what the management or members of the organization do is the reflection of its ethics, whether it's positive or negative. We can evaluate it from them. Because management behavior is inseparable from organization's ethics. The conduct of organization is a direct reflection of the ethics of its members and the guidelines set by management or the board. Then our ethical decision making. This includes fairness, integrity, due diligence, and fiduciary responsibility, where the fairness means making judgment without bias, discrimination, or dishonesty, and applying the same rules to everyone. Integrity begin honest and consistently following moral principles in all situations. And due diligence is taking reasonable care to avoid harming others by thoroughly investigating and verifying information before making professional decision. And fiduciary relationship or responsibility is the legal and ethical obligation to act in best interest of another party, like directors acting for shareholders or lawyers for clients. Okay, then our next topic, what is fraud? Basically, fraud is any legally act involving deceit, concealment, or violation of trust, primarily to gain a personal or business advantage. And it does not require the use of physical force or violence. Okay, then fraud benefiting the organization. That means some point we can explain like improper payments like bribery, kickbacks, or illegal political contribution. Then transfer pricing fraud means intentionally valuing goods incorrectly between related organizations to manipulate operating results. And financial statement fraud is misrepresenting financial records to boost the company's economic appearance. For example, we can say overstating assets or hiding liabilities of the company. Then fraud detrimental to the organization. So basically, fraud happens when someone lies, cheats, or steals to get money or an advantage dishonestly. When fraud occurs inside a company or organization, it causes detriment like serious harm, loss, or damages. Here is how fraud damages an organization in simple terms like direct loss, stealing cash, submitting fake invoices, or padding expenses reports, and extra cost like the company has to spend extra money on legal fees, hiring investigators, and conducting audits to fix the problem. So here are some points like conflict of interest. So an employee has an hidden personal economic interest in a transaction that hurts the company. And then embezzlement is stealing money or property and falsifying records to hide the act. Then expense reimbursement fraud like claiming fake expenses, non-existent meals or personal travels, etc. Then payroll fraud is manipulating payroll by creating ghost employees or faking hours worked. And accounts receivable fraud is creating fake invoices, overcharging customers, or filing to record bad debts to inflate financial health. And cash and inventory theft is physically stealing goods or skimming cash before it is recorded in the accounting books. Okay, then next is IMA statement of ethical professional practice, and the framework is the IMS provide a roadmap of ethical rules designed to help management accountants make honest choices and protect the profession's overall integrity. Members are expected to put professionalism ahead of personal gain and build an open, positive workplace culture. So there are four core principles of professional ethics and also four core standards that are called action, and the principles are mindset. Let us discuss those. So the honesty is doing your task thoroughly and telling the truth in all communications. In case of fairness, giving a fair consideration to others' needs and disclosing all context fully. Then objectivity begins completely impartial and neutral when looking at conflicting viewpoints. And responsibility, working with professional care, loyalty, and acting in the best interest of stakeholder. So then the core standards, the action includes competence, that is keeping your skills updated, obeying the laws, and giving clear, accurate, risk managed advice. Then confidentiality, which is keeping secret data safe unless legally clear to share it, and never use it for crooked advantages. Then integrity, dodging conflict of interest, then refusing to engage in biased practices and keeping the profession looking good. And then credibility is giving out all fair relevant data on time while openly stating any limitations you have. Okay, then resolving the ethical conflicts. So in case of ethical conflicts, you need to have some points to remember, like the chain of command rules, outside lifelines, the ultimate exit, and the other seven steps evaluation checklist. So the chain of command rules include: if you spot bad behavior, follow your company's ethics policy first. If that doesn't work, then take it to your immediate supervisor. If the supervisor is the one doing the wrong thing, skip them and go straight to your next management tier, all the way up to the board of audit committee if needed. Then taking to the outside source not connected to the company is generally a bad move. So initially you have to try to solve it within your organization, like your supervisor or your immediate senior. Up to the audit committee, you can try to solve the conflict. And outside lifelines, like you can have a complete anonymous chat with IMA ethics counselor or talk to a lawyer to understand your legal safeguard. And the ultimate exit is if you try everything and the company refuses to stop the unethical practice. Your final choice is to walk away and disassociate from the organization. Okay, there are 7 steps evaluation checklist we can see. There's a first one is the define the issue clearly and get the real facts. And secondly, identify who will be hurt or affected, like your supervisor or the head of the department. Then look at which IMA ethical guidelines apply, then pinpoint the explicit threats like intimidator or self-interest, then check the internal company rule books or guidelines, then brainstorm steps and ask will it stand up to the public scrutiny, and the last one is track the outcome and document the process. So this checklist will help you to evaluate what should you do and take the proper decision. Then the next topic is a fraud triangle. As we can see that in this triangle there are three area like pressure or motivation, opportunity, and rationalization. And for an average person to commit a financial crime, the three factors must hit all at once. So in case of pressure or motivation, the why personal financial crisis like unpaid bills, addictions, heavy pressure to hit target numbers, or just a basic greed. Okay, then opportunity. The how weak points in the company structure like lack of oversight, missing internal reconciliation, or poorly monitored system that let someone abuse their position. And this this all those lackings give them the opportunity to commit for fraud. And the rationalization is the excuse how the fraudster sleeps at night. They tell themselves I am underpaid anyway, or I am just borrowing the money, or my family needs this. So all the 3 points are the overall fraud triangle. Then our control strategies are, we can say, management defense strategy and the 4 pillar of anti-fraud design. Here the management defense strategy is no internal control setup is 100% foolproof. However, management has the absolute most power over blocking the opportunity leg of the triangle by fixing them flaws, and they can curb pressure and rationalization by keeping a strong ethical culture. And the 4 pillar or anti-fraud design is a complete shed, needs prevention, detection, deterrence, and response working together. This is done via risk check, fraud training, anonymous whistleblowing setup, and rock solid internal controls. So this is the overall summary of chapter 1. I hope this will give you a basic structure outline for this chapter. And we now it's time to practice some MCQs for this chapter. I hope after practicing MCQs, your concept will be more clear, and we will try to give a clear picture of this chapter by practicing the real MCQs that are exam standard. So if you like these videos, then subscribe to our channel and give a like and comment if you have any recommendation, so that we can improve, and let us know how you want this course more effective. And after end of this course, I will provide you some FMA materials that will help you take preparation more effectively. Okay, thank you for your watching. Bye.